Hello everyone. To a thought-provoking exploration of the complex world of corporate taxes. Today, we delve into the practices of three tech giants that have left a significant imprint on our modern lives: Amazon, Apple, and Google. These companies have not only revolutionized industries but have also made headlines for their tax strategies that have raised eyebrows and sparked discussions about the ethics and intricacies of corporate taxation. 1. Tax incentives and offshore profit shifting. Companies often utilize tax incentives and offshore profit shifting to minimize their tax liabilities. They establish subsidiaries in countries with lower tax rates, channeling profits through those subsidiaries to take advantage of favorable tax treatment. Let's have a look to Amazon. It has faced criticism for routing its sales through subsidiaries in countries with lower tax rates, effectively reducing its overall tax burden. In 2020, despite generating significant revenues, Amazon's UK subsidiary reported relatively low profits, resulting in a lower tax liability in the UK. 2. Research and development tax credits. Companies can claim tax credits for research and development expenses. While these credits are intended to encourage innovation, some companies have been accused of exploiting them to reduce their tax payments. As a good example is Apple, where it has been known to claim R&D tax credits for its technological advancements. In 2018, Apple received over $9 billion in R&D tax credits, contributing to a lower effective tax rate. 3. Use of offshore tax havens. Large corporations can establish subsidiaries in offshore tax havens to shelter profits from higher tax jurisdictions, thereby lowering their overall tax liability. For example, Google, through its parent company Alphabet, has been criticized for using offshore subsidiaries in countries like Bermuda to legally reduce its tax obligations. This practice has allowed Google to shift a substantial portion of its international profits to lower tax jurisdictions. 4. Foreign earnings deferral. Companies can defer taxes on foreign earnings until those earnings are repatriated to the US. This deferral can lead to lower effective tax rates as companies keep foreign profits offshore. Another example with Apple. It has come under scrutiny for holding significant amounts of cash offshore and not repatriating it to the US due to the tax consequences. By doing so, the company has been able to delay paying higher US taxes on its foreign earnings. 5. Lobbying and influence on tax policy. Companies with substantial resources can engage in lobbying efforts to influence tax policy in their favor, creating loopholes or securing favorable tax treatment. Amazon, Apple, and Google, among other tech giants, have been criticized for their lobbying efforts aimed at shaping tax policies. These efforts have led to changes in tax laws that may benefit their business models and reduce their tax obligations. In the dynamic realm of global business and taxation, it's evident that companies like Amazon, Apple, and Google have employed intricate strategies to manage their tax liabilities. While some of these strategies are well within the bounds of legality, they've triggered important debates on the fairness, transparency, and adequacy of the current tax system. In theory, there are many more to decrease tax payable, but we discuss the most popular methods that were practiced in multi-million companies. If you like video, please press like button and subscribe.